Good afternoon, everyone, and welcome to our commercial RPR webinar. This is Robert Rodriguez with the Miami Association of Realtors, and today we are going to be reviewing the RPR Realtors Property Resource for commercial properties. Also, we will be going over the investment analysis tool, which is called the Evaluate tool inside of RPR. If you have any questions, you can feel free to chat with me and I will answer your questions after the session is completed. Also, I want to remind you we are recording this webinar and we will later load this into our YouTube page, which is Miami Trainers, also inside of our Facebook page, which is also Miami Trainers. All right, so here we are located inside of the Miami dashboard, and of course we are looking for RPR. RPR is a nationwide program offered to you by your National Association of Realtors. Also, it is available for residential use and commercial use. So once we click on RPR, you will automatically be logged into the residential RPR unless you are a commercial member of the Miami Association of Realtors. Therefore, your commercial dashboard will log you in right into your RPR commercial. For all of us who are looking at RPR residential, we will locate the commercial word up here next to your name, and we will click on commercial. This will switch us to the RPR commercial. So what we are looking at is a white and red screen, normally indicating that this is a commercial side of RPR. All right, folks, if you you want to enable your audio by going to your device and enabling your audio, whether it's a computer or your mobile device. This is going to allow you to listen in. I see some people are chatting with me that they can't listen. All right. All right, so here we are inside of commercial RPR. Again, this is nationwide. This means that you can look for properties all over the U.S. Of course, locally, what we have is the local commercial properties plus the listings that are available inside of your MLS matrix. So starting with the search for properties right here, you can go ahead and click on Go to Search, and we're going to start searching for properties. You can search for all properties. This is on or off the market. Or you can search for properties for sale, for lease. You can run a market analysis, and you can use the thematic maps. We will be going over all of this in today's session, starting with all properties. So if I wanted to look at a property, and I know the address, so let's go ahead and put in the address of a commercial office. And you'll notice that right away the address is located. We click on it, and we're going to go ahead and click on search, and this is going to bring up the commercial property that we typed up the address. So this is for 245 Alcazar Avenue. Most of you recognize this as our Coral Gables office. And you'll notice that this is an office building with 4,889 square feet on a 5,000 square foot lot built in 1953. Now, RPR is going to give you information on the owner of the property and also the tenants that are at the property. So if you were looking at, say, a large office building with multiple tenants, you will see all the tenants and their move-in date. You will also see the ability to make adjustments to the public records. Of course, only on your computer screen, on your program. This is not going to adjust Miami-Dade County's public record or Broward County's public record, only adjusting your screen by clicking on your changes and typing in whatever changes you'd like to make and hitting Save Changes. Highly recommend that if you do make changes to the property, then under Notes that you write and document those changes. Underneath, you have interior details and then also exterior details. You have location details, legal description, and tax information for the previous year. This is called the Property Details Report, and you can always print this report simply by clicking on Print and generate a report of your screen, what you're looking at on your screen. Now, off to the upper right corner, you will see Create a Report, which allows you to study this neighborhood and the demographics by doing either a commercial property report or a commercial trade area report. You also have a commercial trade area analysis and a best businesses report. So let's go ahead and take a look at the commercial trade area report. And what we're going to do is that we're running an analysis that will give us the trade area summary, consumer segmentation, consumer segment details, population comparison, age comparison, marital, economic, education, commute comparison, home valuations, best businesses, traffic count, and about the RPR data. This is a full demographic report. If I was to run this, I'm trying to find out who lives in this area, who are my potential customers for my business, and everything that you see here. So let's go ahead and come to the bottom and let's click on Run Report. And we will wait briefly a few minutes so that report is ready. If you look at the upper right corner where it says Reports, you will see a number, an orange notification letting you know that there's a report being generated. Normally the computer will let you know when this report is ready. So we're going to go ahead and close the details. The commercial trade area analysis, when you click on more details, is basically giving you the map, the summary, and some results on a grid. It's a smaller report. And then you have the best businesses report, which gives you the best businesses and the RPR data. So in all, the commercial trade area report is the more complete report, offering you many more pages and much more information. So this report should be done briefly. So once it's done, we'll go ahead and open it and we'll study it. In the meantime, what we can do is that we can click on Home, and notice that I got there by clicking on Search for Properties and Listings here. If we wanted to search for a listing, we can always click on For Sale and say we wanted to search for a listing in Coral Gables, Florida. And what we wanted to do is we wanted to search for multifamily. Let's see what we got here as far as the multifamily is concerned. We can remove all of these options and only go after multifamily and hit search. And you are pulling now multifamily properties in Coral Gables for sale. Again, this is pulling from the MLS, and we did not get anything available. So let's go ahead and switch this area. Okay, let's go back. And let's put in Miami, Florida. Again, multifamily. Let's hit search. And again, we're going to be pulling multifamily properties from the city of Miami. And again, these are multifamily properties coming straight from the MLS. As long as they're listed on the MLS, they do show up here as for sale. All right, so I believe our report should be ready, and yes, it is. There it is. This is the commercial trade area report for the area of Coral Gables around the office that we were studying. So this is for zip code 33134. And the first page, of course, is your cover page that includes your branding. And then what we have here is the income. Median household income for this zip code is $58,738. That is an age, or a median age, of 44 years old with a population size of 39,594. And the segmentation, the first dominant segment here, is called Urban Chic. If we look at the top segmentations, the Urban Chic represents 25% of the households in this zip code. Southwestern Families is second at 19%. Emerald City is third at 9.3%, followed by the City of Lights and the Young and Restless. Underneath, you will have a full explanation of what each segment is. So, for example, the segment for urban chic are residents and professionals who live in sophisticated, exclusive lifestyles. Half of all the households are occupied by married couples, and about 30% are singles. They're busy, well-connected, and well-educated consumers, avid readers, and moviegoers. If you look over here on the right, you do have information about the neighborhood. More than half of the urban chic households include married couples, 30% are singles. Average household size is slightly lower than the average at 2.37. Home ranges, over 60% of households live in single-family homes. More than 1/4 live in multifamily structures. And then 2/3 of the homes are owner-occupied. So this gets you to kind of become familiar with your demographic and who would be buying whatever merchandise or whatever business that you are trying to open in this area. Underneath your segmentations, then you do have demographic information. So, for example, the total population in zip code 33134 is 39,594, with a projected increase to 41,505 by the year 2023. Now, this information does come from the U.S. Census and American Community Survey via ESRI. ESRI is a data collector who updates information on RPR on a yearly basis. The population density is 7,613 people per square mile. And the population change since 2010 is up 5.28%. You have information on daytime population density. So being that Coral Gables does have a commercial district, there are 12,209 people per square mile in Coral Gables. Average household size is about 2.39%, and that is slightly lower than the average for Miami-Dade County. Population living in family households, female to male ratio, more females than males. And then you have your age comparison, population by age, married and unmarried adult ratio, married, never married, widowed, divorced. Average household income is about $102,574, and that is predicted to increase to $118,000 over the next 5 years. And then Miami-Dade County is at 74, so as you can see, 33134 is higher than the county's average, the median rather. The median household income per capita and average disposable income is $75,904. That is again up from the Miami-Dade County and Florida average. Unemployment, education comparison, and commute comparison. Median estimated home value is at $488,000. That is above the Miami-Dade County average of $323,000. Median list price $625,000. That's above the Miami-Dade County of $400,000 list price. And then the best business. So your blues are your not enoughs, and your tan beige color is too many. So for example, leading the way in not enough would be vending machine operators, direct selling establishments, department stores, lawn and garden stores. Those are leading the way with not enough. On the section where there is too much of, jewelry, leather goods stores, book stores, music stores, automobile dealers, healthcare stores, and also restaurants and eating, there are too many of. Traffic counts. So as you can see, this is a full data report giving you all the information you ever want for a demographic if you're looking to open a business in the Coral Gables section. So what we're going to do is that we're going to close this report and get back to RPR, where we were looking at multifamily homes. Now, I normally tell people not to really refer to RPR to look for properties that are for sale. you can always go to Matrix and you can always do your commercial searches on Matrix and then switch over to RPR like we will do in a little while. But right now, let's go back to RPR and let's do what's called the in-depth analysis here. So let's click on Go to Analysis. This is going to allow us to study a demographic. And basically what we want to do is we want to see what's the broad area you would like to search. So let's come over here and let's put in the city of Hollywood. City of Hollywood, Florida. All right, so what would we like to do in the city of Hollywood, Florida? So we got find people using spending and demographic data. So you can study who they are, and this is to study the people, what they do, where they live, what they buy, how they behave, or facts and stats. So let's go with what they buy, because I'm looking to open a restaurant. So let's come here to now select an attribute, and you have total expenditure, retail goods, alcoholic beverages, apparel, dining out, education, entertainment, recreation, financial services, food, healthcare, household goods, household services, housing, phone, miscellaneous, and others. So let's go with dining out. And we have all dining out, or you have dining out for breakfast, lunch or dinner, or snacks. Let's go with all dining out at restaurants and hit OK. Run analysis. And what we're going to see here is analysis on the city of Hollywood, letting us know how much they spend on an annual basis when they dine out. So here's the city of Hollywood, and what you see are the dark shades are where people spend the most amount of money dining out. So Emerald Hills in Hollywood spends an average of $4,699 per household dining out. If we click on that one and we go to the map, we'll see where Emerald Hills is, and it's right here. This is the section in Hollywood that spends the most amount of money on an average on a yearly basis dining out. You can go ahead and click on any of these to see which section on the map it is. So if you were to open a restaurant, it would make complete sense to open in and around this area because this is a very hot area for dining out. The second option, which is Lake Eden, happens to be just north of your first option. So this is again proof that this is a very hot zone for dining out in the city of Hollywood. Now, how does this happen? How does this information come here? You're going to basically depend on the statistics. Esri, again, is a data company, a data collection company that collects this data from either census or the economic surveys that they do to restaurants and all that good stuff. And you can always find out more information on the data by clicking on the little question marks, and they actually let you know where they come. So annual household spending at restaurants calculations are based on consumer expenditure surveys from the Bureau of Labor Statistics. All right, so let's go ahead and show you once again. If I come back over here to the main page again, now we want to go ahead and study, for example, zip code 33174, and this would be a zip code in Doral, Florida. Now, in zip code 33174, what would I like to know? Who they are. Let's see who they are. You can go and do household size, income, net worth, personal finance, income, personal finance income. You also have vehicle debt, real estate debt, marital status. So everything that you see here, you guys can find out. So let's see what the income level is. And then you have average household income, and you have average disposable income. You have high disposable income by percentage, low disposable income, households below poverty level, and married families below poverty level. So I'm trying to find out who has a high volume of disposable income. So let's go ahead and click on disposable income by percentage and hit OK. Let's run the analysis now. Again, you're going to get a map showing you the shaded colors, and underneath the map you have the highest percentage of disposable income in the zip code is at 58.3%, and this is the extreme eastern portion right here of the 33174. Well, actually, this is not the route. This is 33174. This is a different zip code. Either way, we're studying this zip code, and this is the highest disposable income available for this zip code. All right. So if you were looking to open a business where people are shopping for goods, and this is a good way to find out. Folks, I see that many people are telling me that you cannot listen in. Anyone else having issues listening in? Give me 1 second. I'm going to write in a chat here. Please enable. Remember that you always have to enable your audio on your computer or on your mobile device. All right. So we're going to go ahead and thank you, Leslie. I see that you're in and you are listening to this webinar. Okay. All right. Let's go back into RPR and let's continue. If I go back once again, and let's say we want to do 33178. This is a zip code in Doral. All right, I was confused earlier. So 33178, and we want to do what they do. You can go and you can do industry of employment and find out what industry the residents of 33178 mostly work at, or we can do how they behave. Say I'm trying to open a gym. You have one down here called time spent exercising, and not just a gym, but maybe I want to open a vitamin shop or maybe a health food store or a healthy restaurant. So we can go after people working out over 6 hours per week. So over 6 hours spent exercising, hit OK, and then we want to hit run analysis. And these are the sections of 33178 that have been surveyed, and they spent more than 6 hours a week exercising. All right, so here we have the top, which is 1,228 people spend more than 6 hours per week exercising. If we look at the map and we zoom in, you'll see exactly what section of Doral spends the most time exercising, which is between 41st Street and 74th Street, right over here, close to the Turnpike. Now, of course, this is data collected from the gyms and the existing exercise facilities that are in the area and the memberships to these facilities. All right. What's interesting about all of this is that we can go back and you can combine, so you can do different searches combined in this format. So again, we'll stick to 33178, and these attributes, I'm going to go with who they are and select an attribute, and let's go with income, and let's go with average or high disposable income by percentage, hit OK. Now we can go ahead and hit more criteria and combine this, what they buy, and total expenditure in retail goods. all retail spending. So I don't know if you are following me on this, but we're looking for people who have high disposable income and that shop, buying retail goods. So run analysis, and now I have a combination of the two. And once again, you got best and better. So when we click on this one, this is the best. This is the best area in zip code 33178, where if you were to open up a store where you're selling goods, you're more likely to succeed based on the numbers that you're getting in this area right here. This is for zip code 33178. So as you can see, you can use RPR to really study these demographics and get to know what's the best place for you to open commercial businesses. All right, let's go back to home and go to in-depth analysis once again. And I mean, what you can do is facts and stats. And in facts and stats, you have population stats, housing stats, population trends, and income trends. Let's go over a few of these. How they behave, which we just did. You have where they purchase clothing, where they purchase shoes, orders from websites, amount spent on internet orders, shopped at brick and mortar stores. So if you're looking to open a storefront, retail shop, then you can go with mortar stores. All right. You can also do what they buy, which we already went through this. And let's go into where they live. Principal urban centers. You got metro cities, suburban. All right. So you got all of this here as well. And you can do what they do. Again, that's industry of employment. All right, so you can use this really to focus in on those demographics that you are more likely to succeed. Now, the last part of searching on the RPR commercial will be through our thematic maps. If you enjoy seeing maps and everything on a map, we can go ahead and use the thematic map. And what we're going to do is that we're going to go ahead and study the city of Pinecrest, Florida. And then we have what indicator do you want to display? You have demographic indicator, you also have spending indicators, and you have residential real estate indicators. So as far as demographic indicator, you have average family size, average household income. You also have median disposable income, comparison of females to males, and everything that you see underneath. Now, you can run a spending indicator, and this one is quite humorous. This one is called coffee versus tea. You also have beer versus wine and chicken versus beef. So let's try one. Let's try chicken versus beef and run analysis. You're going to get the city of Pinecrest, and what you're going to get are a map with different colors. And if you read over here, the about data says this map layer compares spending on chicken and beef. Dark blue indicates the most spending on chicken in relation to beef. Almost half of every $100 a household spent on chicken and beef was spent on chicken. All right. So for the most part, it's all blue, and you got a lot of chicken eaters in this area. All right. So you can use the thematic maps, spending indicators, demographic indicators, again, average family household or family size, and it's telling you right here the dark blue, okay, is where you got the most amount of people, and then the lighter blues are with the less amount of people. So use this map to help you figure out the best demographics. All right, so the next part of our commercial RPR course would be learning how to study a property and its investment return. That's going to be using that Valuate tool found inside of each property detail report. So for this, I'm going to go and refer to Matrix real quick, and we're going to find a property that's a commercial, improved, and we're going to look for a sale apartments, and let's go with apartments under $1.5 million. You got 58 in Miami-Dade County. Let's go to results. All right, so here we have a selection of apartments, and I'm going to open one and see that this is an 8-unit for $955,000, and they're telling us that the gross income here is $51,000. That is awful low. I'm not going to look at that one. Let's see if I can find one that has better income source. So here's one at $950,000, and they're not telling us the income on this one. Bear with me, we will find one. Here's one at $865,000, and you've got your income there of $73,600. So we found one. All right. So what we're going to do is that we're going to look for the RPR logo, which is right in here, and we're going to click on it. This will open up the RPR program with the property listed at $865,000. What we're going to do is that we're going to click on Property Analysis for Investors, which is located on the left-hand side of your screen. Click on this and then click on Continue to actually enter the program. Now, once inside the program, you're going to select a property type. This is a multifamily property, and it is listed at $865,000, so that would be your purchase price. With the number of units, it is 6 units. Now, we need to enter some of the numbers, such as the gross potential rent and also your operating expenses. So what we're going to do is that we're going to enter gross potential rent. If you come back to Matrix, you'll see that this property has a rental income of $73,600. So let's go back over here to the valuation tool and do $73,600 for rent. Now, as far as expenses, we are going to add these up. All right, so let's go ahead and come back over here to Matrix, and we'll start with our tax. Our tax last year was $12,899. Looking at it right here, $12,899. I am using my calculator to add this up. $12,899. Now, oh, actually, this is the total expenses. No, sorry. Your taxes are $7,400. You know what? I'd like to verify that. I'm going to open up IMAP and see what the taxes are for this property. $7,400 seems a little low. Perhaps that was the 2017 number. So I'm opening up IMAP right quick, if the internet allows me to open it quickly. Come on. Bear with us, folks. We can never control the speed of these programs. All right, this is what I'm going to do. I'm going to go here to RPR and show you that the tax last year was $8,740. So it actually went. So IMAP is taking forever to open. So in RPR, total tax amount, $8,740 last year. So let's put in $8,740 on my calculator and then go back to Matrix and see what else can I find here. All right, so they're saying that the insurance expense is about $2,500. So let's add $2,500 to that. Now we're at $11,240. Your trash expense is about $1,600. So add about $1,600 to that. Now we're at $12,840. And anything else that we see here, we don't. However, we probably we know that we're probably having to pay for water, and this is a 6-unit. So let's estimate that water is at $50 per unit per month. That's $300 a month times 12. That's another $3,600 in water. You're up to $16,440. And how about reserves? So if your income on this is $73,000 a year, we could separate another 10% for reserves. So let's go ahead and add $7,300 For reserves, now at 23,740. And if you needed to hire a property manager to manage the property, you should also estimate spending another 10%, so plus another 7,300. Now you're looking at $31,040 for your expenses. Now again, we are just running some estimated numbers. You of course have to confirm this. I'm just trying to show you how the program works. So $31,040 for total expenses with a gross income of $73,600. Now, when are we purchasing this? Let's go ahead and say that we're purchasing this on August 1st, 2019. Our holding period is going to be 10 years, and we are going to finance 70% at a 5.5% interest rate. And then, of course, equity players will be one, that's one investor, and simply hit submit. The system then will return an average cash on cash of 6.46%. So it's pretty healthy. It's over 5. To me, anything over 5% cash on cash on a year-to-year basis is excellent. And what we have is a net cash flow return after 10 years of $607,698. Now, your levered cash flow or your levered analysis is after your debt service, after you pay off your mortgage, you are left with a 4.88% return on your investment. Not return on investment, but average cash flow. And that's a $331,000 net cash flow at the end of a 10-year period. Now, if you focus on this number right here, IRR, investment rate of return, you're actually functioning at almost 70% return on your investment at the end of the 10-year period. And if you were to finance, you're at almost 92% of your investment. So 99.1 times 10 years, you're almost at 92% return on your investment over a 10-year period. So it actually makes much more sense to finance. You make more money on your investment if you were to finance, or rather than paying cash for your property. Either way, this is a good investment property. You can always go to purchase and sale, and you can adjust your purchase price. You can adjust. Oh, we haven't added the closing costs. Let's go ahead and add closing costs. So if it's $865,000 our purchase price times 5%, about $44,000 is your closing cost. That's going to affect your number here just a little bit because we have to apply closing costs. But here you guys can enter different numbers. You're still looking at a cap rate of 5.18%, which is pretty good. Sources of funds. This allows you to adjust your interest rate. Again, your purchase price. And what I like about this is that the system automatically includes what would be a 2-year refinancing period, lowering your interest rate. If you exclude this, then this number will go up to 4.59%, but you're making less return on your investment after a 10-year period because you did not lower your interest rate. So you improve your cash on cash, but you make less after a 10-year period. If you include a refinancing period, you are going to lose out on closing costs. However, you're going to do better at the end of a 10-year period. So all of this can be, let's look at cash flow 1 second. So in cash flow, when you go down here, you'll see that you can enter all the information, expenses. So what we did was we entered everything as miscellaneous. But definitely you can summarize all your expenses here, and you can read what your income is on a year-to-year basis, gross, and then what your expenses are. And then you have your operating cash flow after expenses, and then you have your debt services, so your loan debt services, and what you are making. If you had a loan, you are at a loss on the first year because of your acquisition cost, your down payment, and then you made a little bit of money on the first year. You did not make any money on the second year because of our refinance. Remember the closing cost for the refinancing, and then you start making money right away. So if you want to see this change, then you can go back to sources of funds, exclude the refinancing period, go back to cash flow, go all the way to the bottom, and the only time we do lose money would be our acquisition costs, which is our down payment, and then you immediately start making money every year. All right, so if you want to print this, you can always go over here to File, Export PDF or Excel, and you can print it and save it to your computer. If you wanted to save this, you can go to File, Save, Property, give the property a name and save it, or you can save a scenario because you can do multiple scenarios for your customer. All right, so this is exactly how you work the property analysis tool from RPR, which is always located for commercial properties on the left-hand side in red, as you can see right there. Keep in mind that we do cover this at the association. Every time you register for an RPR commercial course, we'll show you how to pull demographic reports and also the investment analysis for an investment property inside of RPR and also your matrix program. This webinar has been recorded, and we will be placing it inside of our YouTube page and also our Facebook page. We can be found at Miami Trainers. We invite everyone to watch it, give us some feedback. We want to thank everyone for watching, and most of all, thank everyone for being Miami members. Have a great afternoon.